Hi and welcome to our daily market outlook report. Today we'll be looking at a possible volatility breakout setup in relation to economic data, which is due later on this afternoon, 1:30, which is US non-farm payroll numbers, unemployment rate, average hourly earnings. So now let's zoom in onto the chart and look at a few estimates, consensus, and the previous reading. While you're looking at Dow or Wall Street chart, today at 1:30 or 12:30 GMT, US unemployment data will be released, which is also known as US non-farm payroll figures, and the estimates are between 150 to 175,000 depending who you ask. Consensus is around 160 across the board anyway, and the expectations are that US unemployment rate will remain unchanged at 3.5% for the month. Now, let me just tell you what a couple of banks are looking at and then how that might impact Dow Jones or US equity indices going forward. TDS Bank is expecting around 150,000, so slightly below that 160 kind of consensus. Deutsche Bank is looking, their economists are looking for 160 to 163,000 jobs created. ING are looking for 150,000, yet again slightly below 160 consensus forecast. Danske Bank is looking for non-farm payrolls at 175,000 and wage growth of 3% year on year, so they're above that consensus. Westpac is looking for 170,000. Yet again, slightly better than consensus, and they're looking for unemployment rate to remain at 3.5. The Fed will release semi-annual monetary report, which will be presented to Congress on Tuesday or Wednesday next week. So that's what they're looking at as well. And Wells Fargo, they are looking for unemployment non-farm payroll, adding 160,000, and they're also expecting US unemployment rate to remain at its 50-year low of 3.5%. Now, let's take a look at Dow Jones and see how this might play out today. So from the trend point of view, this is the intraday, this is the one hourly chart. We can see that intraday 1 hourly price action is uptrending, and we are seeing a consolidation here. We are seeing a sequence of slightly lower highs and slightly lower lows. So basically, if you remember when we were talking about energy buildup, energy is building up and price or markets are waiting for economic data, which will be a trigger for an explosive reaction in some way or the other. So since we know that unemployment rate is expected to stay at 3.5 and consensus for non-farm payroll is around 160,000, if we get a much better number than expected, there is a possibility that the price for Dow Jones might rally higher and break above this current initial upside resistance at 29,350, 29,370. Confirmed breakout above that level could potentially trigger a spike higher, therefore an extension to the upside towards 29,400, 29,500, 29,550. Alternatively, if we see a weaker number than expected, that could be perceived to be negative, therefore bearish, concerns about virus impact on the global economy, and so on and so on. Then keep an eye on this support trend line here, and then also this rising support trend line. So X marks the spot for us, and in that case a dip below 29,150, 29,130, the zone of this about 20 points, dip lower, a retest of that level from underneath as a newly found resistance could open the way for an extension to the downside towards 29,040, 29,000, 28,900 possibly even lower to cluster of these lows if we see continuation and exuberant selling pressure. But these are the levels. Upside is capped by 29,350, 29,375, the range of 25 points. Downside support is at 29,150, 29,130. That's your support. Stay safe, happy trading, and talk to you soon. Bye for now.